Hi everyone, it is Duke here. I'm making this video to review what we have covered so far in Chapter 5. So Chapter 5 is about planning, understanding the entities, and evaluating business risk. There are 7 learning objectives in this chapter, and from my perspective, I believe that learning objective number 2 and number 4 are the most two important learning objectives. Alright, the major section in this chapter including client's acceptance and continuance, audit planning, understanding the entities and its environment, business risk, developing an overall audit strategy, assigning and scheduling an audit staff, and the analytical procedure, right? So the emphasis in this chapter is on outlining the procedures undertaken at the beginning of an audit. These include the client's acceptance and continuance decision, preparing the audit plan, and the purpose and content of the engagement letter. This chapter also covers the importance of understanding the client and its environment, and making an assessment of the client business risk. This approach will emphasize on the business strategy as distinct from a financial risk, right? With an emphasis on analytical procedure at this planning stage of the audit. The chapter also devotes considerable attention to the types and use of these analytical procedure. Alright, so here is where our chapter 5 will stand in the whole financial report audit process. Right, this is the learning objective 5.1, client acceptance and continuance. The emphasis here is on the step in accepting a client, discussing client evaluation procedure, and communication with the previous auditor. The engagement letter is important because it's the letter from the auditor to the client to document the arrangement made with the client and to clarify the matters that may be misunderstood. So the learning objective 5.1 will be covered from slide number 4 to slide number 12 that I'm going quickly to show you here. So I changed the title to red because in my opinion this is the important slide that you should read. Alright, okay, pay attention to the auditing standard AS/210 because that is tell you all the requirement of the agreed terms of engagement. So this is also one of the questions that have been presented by the group presentation of the RBL case study. Right, so here are the form and content of the engagement letter. Right, now learning objective number 2, audit planning. So the audit planning will be covered from slide number 13 to slide number 16. Right, so this slide outlines the importance of the proper audit planning. It is important that you see the difference between the two major audit, the planning document, audit strategy, and audit plan or audit program. Right, so audit strategy sets the scope, the direction, and the timing of the audit, and guides the more detailed audit program, where audit program sets out the nature, the timing, and the extent of audit procedure. So the title I changed to red because I believe that this is important. Right, so overall timing of audit engagement will also include the 3 stages, planning, interim, and final. Right, so the planning and interim phase is where the auditor will obtain an understanding of the entity. The evidence gathering phase is either in the interim before year-end or final after the year-end, right? Substantive tests will be done either at the balance date or will be performed close to the engagement completion, so after the year. Right, learning objective number 3 is understanding the entity and its environment. The business approach emphasizes the importance of obtain understanding of the client's business and industry. So the slide number 17 to slide number 23 covers the purpose and procedure involved in obtaining this understanding. Right, learning objective 4 is about business risk. Right, so that's starting from slide number 24 to slide number 54. Right, business risk is the risk that an entity business objective will not be attained, and its assessment requires obtaining knowledge of the client's business. It involves understanding the client's strategic advantage in relation to its competitor, understanding the key business process risk, and identify and evaluating key performance indicators. Okay, so on the screen, this is the figure 6, the relationship between the client business risk, global, local, and internal environment. It is important to understand that while most business risks have financial consequences and therefore eventually affect the financial report, not all business risks will result in risk of material misstatement. Therefore, business risk is actually broader than the risk of material misstatement, but inclusive. Right? So, okay, now we go to the next terminology, significant risk. Significant risk is the risk that of material statement that require special audit consideration. So there are a number of factors to consider when determining the significant risk. They including the fraud, recent significant economic, accounting, or other developments, the complexity of the transaction with the related parties, the holding companies, and subjectivity in measuring related financial information. Right? So auditor respond to assess risk. They should determine the overall responses at the financial report level and perform audit procedure at an assertion level. Right. Now, so this is the important figure that I suggest you to look and understand. Now, learning objective number 5, developing an overall audit strategy. It will be from slide number 35 to slide number 38. All right. So the slide, at this stage, consideration is given to the different types of audit strategy, the approach of relying on internal controls versus the predominantly substantive approach. Right. So this is done before the control risk is assessed. Preparing a detailed audit plan or program follow from a planned audit strategy, and how the audit strategy is documented. So there are two tranches of audit strategy. One is rely on the control, right? When there is a low level of control risk, then so you perform more control risk, more tests of controls, and then less substantive tests. Or another one when you believe that the internal control is not effective, and you can ignore or perform a very minimal test of control and perform a lot of predominantly substantive tests or substantive approach. Right? Okay. So now slide number 35 to slide number slide number 38 to slide number 43. They show you how to prepare a detailed audit plan and audit program, follows from a planned audit strategy, and show how the audit strategy is documented. Right? Learning objective number 6, which is in slide number 44 to slide number 45. Right, so it's talking about assigning and scheduling audit staff. Okay, as the audit strategy is developed, staff are assigned, including the consultant, specialist, internal audit, as well as any external expert if there is the requirement, similar to the presentation of Group 1 on the RPL case study. Right, so slide number 46 to slide number 51 is about the last learning objective, analytical procedure. Analytical procedures are also used extensively to gain understanding of the client's business and place even greater emphasis on the business risk approach. It is important for students to recognize that analytical procedures can be used at all stages of the audit, although at this point we are concentrating on their use at the planning stage. It is important to go through how the key ratio will be calculated and how the auditor may use the result to identify risk area. Right, so we can see there are different steps in performing analytical procedure at the planning stage as shown on figure 5.11. Right, and there are different types of analytical procedure. Some are simple and some more complex. Right, there are some most commonly used in planning, which I have already highlighted here. So either you can compare between the current audited period with the previous period, or the budgeted amount, the forecast amount, or you can calculate the ratios and the percentage of relationship, either with the previous year, with budgeting, or with industry average. So that is the ratio analysis that I have made another video. And there is the significant variance from expectation the auditor should investigate. Right, so ratio analysis, and I have made a video on the ratio analysis. So in summary, there are different type ratio to compare. Either you compare with industry data or you compare with the internal data. Internal data is the data available from the company. It may be the previous year, it may be the company forecast or budget, or it may be compared between the different department, different section inside the company. So all the ratio analysis is being performed with open and unaudited financial information. Right. Right, so some ratios that commonly used in the planning stage, including short-term liquidity, activity, profitability, solvency. So all these ratios are important. Right, so in the example 5.8, we look at the common size statement. We look at the trend statement in example 5.9. Right, so the most important to focus here is the reliability of data to use in analytical procedure. That is something that the auditor need to make sure that they pick up the reliable data. Otherwise, their analysis doesn't mean much. And when there is a significant fluctuation with their expectation, they need to investigate, and that is also indicate that there is the high risk area that the auditor should perform more testing, more work, more substantive tests in the fieldwork area. Right. So in summary, they are the key points that have been covered in chapter 5. So I hope that it helped you to summarize the chapter 5. I know that there is a lot of information in this chapter, but hopefully, we will do more and you will understand more. So I see you in the next video. If you have any question, please let me or your tutor know. Thank you. Bye for now. See you in next video.